Everybody, what's going on? David, Don, Rob, Donald, Dan, Will, Craig, Scott, Terry, Mark, Kevin, Rongemer, Andrew, Mary, Sledge. Good to see everybody this morning. Ted, Sergio, JB, Darren, Diane, and all my channel subscribers like J. Will, Jason, S. Kohler, Alan, Matt, Jan, Larry, Catherine, Ed, Mark. Good to see everybody this morning. And are we in the AI bubble or an AI gold rush or a little bit of both? I mean, we have Zero Hedge. I commonly look for dirt and stories on Zero Hedge, and we have Zero Hedge talking about the AI industrial complex yesterday in an article. And I mean, Zero Hedge, obviously a bastion of financial doom and gloom, kind of makes your grandmother's Depression era hoarding look optimistic, but they discovered something that maybe, just maybe, this whole AI thing might have some unintended consequences. As anybody that's followed me for a while, I love talking about the unintended consequences. I mean, it's shocking, right? I know. So apparently we're building an AI industrial complex, kind of like the military industrial complex, but instead of making bombs, we're making chatbots, and maybe they write your kids or grandkids college essays, generate pictures of cats wearing business suits. I mean, this is progress, people. Real progress. This is what progress looks like, including my thumbnail for today, right? I mean, let me break this down for you in terms that won't require a PhD in economics or maybe a subscription to the Financial Times. According to our friends at Zero Hedge, the AI bonanzas, well, it has 5 telltale signs that maybe should make you a little bit nervous or possibly very, very rich. I know that's why you're here. So it depends on how you play it, right? First up, the big problem that everybody hasn't really, I mean, we acknowledge, but we don't really acknowledge electricity. Apparently, these AI data centers are going to use as much power as Japan by 2030. That's right, the entire country of Japan. The place where we make Toyotas and Nintendos and inexplicably popular vending machines that sell everything except common sense over there. But this AI stuff is supposed to take all the power of that entire country by 2030, just for the data centers here in the United States. Now, if you're a normal person, you might think, well, it sounds kind of expensive and maybe not so great for the environment. But if you're a savvy investor, which I know you are because you're here, instead of watching TikTok or Facebook or whatever, you're thinking, how do I make money off this, right? That's our question all the time. Here's the thing. Somebody's got to generate all the power, and somebody's got to deliver it, and somebody's got to upgrade the grid so it doesn't collapse under the weight of ChatGPT trying to explain why pineapple belongs on a pizza. Does it or doesn't it? I don't know. You let me know in the chat. So look, utility companies, especially those in data center hotspots like Virginia and Texas, well, we got companies like Dominion Energy. They're already asking for rate increases. When these utilities can raise rates and blame it on AI innovation, that's what we in the business call a beautiful thing. Consider utility ETFs like VPU. I'll give you a list of the stocks afterward here. VPU, or individual plays like NEE, NextEra Energy, if you want to bet on infrastructure build out. But wait, there's more. Google has used 6 billion gallons of fresh water last year. Think about that, 6 billion gallons. That's enough to fill 9,000 Olympic swimming pools, or roughly the amount of tears shed by investors who bought Zoom at the peak. Anyway, water infrastructure and treatment companies like American Water Works, AWK, or Essential Utilities, WTRG. When tech companies are literally using all the water a city would produce, somebody's got to figure out how to make more clean water. It's like turning lead into gold, except it's turning sewage water into something Google can use to cool data servers and AI. Now, here's where it gets kind of fun. According to the Brookings Institution, yes, we're talking about something as exciting as it sounds. About 30% of American workers could see half their jobs automated But don't worry, it's mostly targeting mid-skill level professional roles, the people who actually middle class. Anyway, the beautiful irony here is that these same families are going to be paying higher electric bills and losing their jobs to AI. So it's like paying for the rope that's going to hang you, except the rope can also write poetry and solve some math problems. But here's the kicker. Access to the good AI, the best ones, cost money. ChatGPT Plus is $20 a month. The enterprise version, $200 a month. So we're creating a world where the people that can afford AI get to keep their jobs and everybody else gets to, let's say, pursue other opportunities. I guess that whole push on learning to code is going well, right? So this all screams to bet on companies that own the AI. Microsoft, MSFT, with their OpenAI partnership, Google with their everything AI strategy, and NVIDIA because, let's face it, they basically are printing money at this point. And these are the companies that aren't just selling shovels in the gold rush. They own the entire gold mine and all the equipment that runs it. But also consider the flip side, companies that help people adopt AI. Think educational technology, retaining platforms, even the old school community colleges. They're going to see a surge in enrollment when people realize that their marketing degree isn't going to cut it in the age of artificial marketing intelligence. So here's where the article really goes off the rails into Fantasyland. The solution to mass unemployment, UBI, Universal Basic Income, because nothing says sustainable economic policy like paying everybody to sit at home and play with robots. I don't know. The author suggests that big AI is going to become the arbiter and judge of this new social contract. Basically, we're going to let the same companies that can't figure out how to stop their chatbots from being racist decide who gets more money and who doesn't. What could possibly go wrong in this scenario? So if UBI becomes a thing, you want to own the companies that benefit from increasing consumer spending with no corresponding increase in productivity. Think about consumer staples, entertainment, anything that people buy when they have money to blow, but no job to go to. So we're talking Walmart, WMT, Netflix, NFLX, and maybe even some sin stocks because let's be honest, if robots are doing all the work, humans are going to go have fun with their vices, right? So I had to edit that one a little bit live there. Sorry. The author's big solution, well, let's keep AI regulation at the state and local level, because if there's one thing we've learned from the internet, it's that patchwork of conflicting local regulations really helps innovation flourish, right? I mean, that's a bit of sarcasm. So just in case anybody tried to figure out the online sales, try to sell something online and deal with online sales tax, I mean, just ask them. It's a nightmare. Right? But here's the thing about regulation. It creates winners, it creates losers. Big companies that can afford armies of lawyers and compliance officers, they win the game. The little guys, the mom and pops trying to get their foot in the door online, not so much. But it also breeds things like Shopify, SHOP. They provide the solutions for online problems. So bet big on tech companies that can navigate the regulatory complexity. They're not going to survive. They're not just going to survive, right? They're going to excel. They're going to use it to crush small companies. It's like watching a game of Monopoly where only one player starts with hotels and all over the board, and everybody else is trying to catch up. So one bad move, you're bankrupt. Now let's step back from the doom and gloom just for a second. Yes, AI probably is changing things. There's going to be winners. There's going to be losers. There's things that the article didn't mention. This is also the biggest technological shift since the internet. The internet made a lot of people very, very rich. Maybe not the first go around, but maybe the second go around. So companies spending the most on AI infrastructure, your Alphabet, your Amazon, your Apple, your Meta, Microsoft, NVIDIA, they're not just doing this for fun. They're doing it because they see a massive profit potential when this thing turns. I've talked about the fact that right now we're spending $100 to make 6, but eventually this whole thing will probably play out. But in what timeline, right? When these $1 trillion market cap companies all agree that something's probably the next big thing. See how Meta went for the metaverse, but nobody else followed them. Now Meta's on AI along with everybody else. They're on the bandwagon. You don't fight the trend, all right? The Magnificent Seven stocks might seem expensive, but they're expensive for a reason. There's lots of excitement around this. They're building the infrastructure for the next phase of human civilization, whether you want to accept it or not. You can either own a piece of that or watch from the sidelines while complaining about how unfair it all is and how you think it's all full of crap. But also consider the picks and shovels plays. Data center real estate investment trusts like Digital Realty Trust, DLR, American Tower, AMT, semiconductor equipment companies like Applied Materials, AMAT, cloud infrastructure providers like Cloudflare, NET. These companies might not get the headlines, but they're in the background building the backbone of the AI economy. Look, the AI industrial complex, it's probably coming, whether you like it or not, or whether you agree with it or not. You can either position yourself to benefit from it, or you can spend your time writing angry letters to congressmen about how unfair it is and we should regulate the crap out of it. The smart money isn't betting against technological progress. It's betting on the companies that are going to profit from it. And that means your electric bill's probably going up. Your job's probably getting automated away. And at least you're going to have some nice dividend payments to cry into if you do it right. Diversify your AI exposure. Don't just buy NVIDIA and call it good. Get some infrastructure plays. Get some software companies. Get some utilities. Diversify your plays. Maybe some international exposure, because this isn't just America first. The rest of the world's competing in this game too. And remember, the immortal words of every financial advisor who's ever lived in the past: past performance does not necessarily indicate future performance. All right. Got to mute that. So in this case, the House, big tech, they're not just winning. They're going to rewrite the whole rules of this game. So buckle up, Buttercup. The AI revolution is here. It's going to be a wild ride. You can either get on the train or you can get run over by it. But stay skeptical, my friends. Now, if you excuse me, I'm going to have to ask ChatGPT to pick up the next stops here after I get done, because if you can't beat them, join them. So anyway, hopefully y'all enjoyed that. And wrong Cisco there, Seth. You wrote the Cisco that does food. You got to be careful. Some of these are winners, some of them are losers. I'm trying to paste the tickers in the chat that I mentioned there. And let's talk about how we actually make money today. So all trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. I make some predictions. I make some, talk about some stuff. May or may not come true. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. And if you desire personal financial advice, hire and consult a financial advisor to tell you what buttons to push, because it's risky to trade stocks, options, bonds, forex, futures, cryptos, treasuries. You might lose money trading them. So don't do that unless you know what you're doing and you have a plan. So the calendar for this week, we've got the symposium coming up on Friday. Jumping back to this week. I guess the symposium starts on Thursday and then rolls into Friday. That's, if you didn't know, that's Jackson Hole. Be careful. And interesting, new homes, for the first time ever, the median new home price dropped below the median existing home price. For the first time ever in the history of our country. Think about that for a minute. We got housing starts yesterday in Canada. We got housing starts and building permits here in the United States today. That's crazy. Think about that. New home, the median new home costs less than an existing home in the United States for the first time ever. First time ever. Something's about to go down. We get the Fed meeting minutes on Wednesday. from the last Fed meeting. And we get that Jackson Hole news on Friday. So stay frosty. We could do a correction here. Let's look at the charts. Let's check it out. See what we got. S&P 500. Still grinding the top. Haven't hit the ultimate upside target yet. Look at the overnight action. See if we can glean any kind of anything here. So S&P 500 futures. Mentioned under the 15-minute, we were kind of in a downtrend. That's what's happening. Still what's happening. Still what's happening. Still what's happening. Right there. If we can break through, we start looking to the upside. Now, proportion-wise, what does this look like? Are we done? Are we like possibly done? You know, what? So we got to start running some fib lines here. That one hit a 50%. That could be an ABC. It could be an A, a B, and we're working on the C. The C looks very sloppy. Does not look impulsive. So I'm not sure that that's the operative count here. Looks more like an A, and this is some sort of B. Drift down lower. And this could take us down into this vicinity or right around this 64.20 to 64.40 area right there with the way this is kind of drifting off. Jump right into the technical analysis for you today. We're sitting here, moving up time frames, finding resistance at the 30-minute. That's also bearish or underneath it. Looking at the 1 hour time frame, we bounced off of it yesterday. Could we save it? Could we hold it? Are we going to fold it? It looks like we're going to push on down here. Just a reminder, that's kind of the way we've got this set up. It's for a flush on down here. Let's look at the 4 hour. And 4 hours got support way down here. So we may push through the 1 hour and then come back up through. But keep an eye out. We could drop on down to the 4 hour down here. And if we get down to the 4 hour and don't find support there, the daily's way down here. Way on down here. I'll probably pull it up a little bit. And it's been a while since we visited that. Like May. You can see we'll go a few months and then we come visit it. We go a few months, sometimes a lot of months, and then we come visit. So eventually we're going to come back. It could go on for a while. Eventually we're going to come back to the daily. Now, the longer we go, the higher it's probably going to be since it's based on EMAs. If you don't have it, go check out the video on my channel. After we're done here, the video pinned to the home page of the channel here on YouTube gives you the code. And if you just want the easy button, links in the description. It's like $5. It's not $5. Somebody last night was like, I was talking to Rongamer last night. He's like, you charge $5 a month for that. You should, blah, blah, blah. It's pretty valuable. I was like, no, it's $5. $5. Like $5 gets it. Like period. It's one time. $5. So less than a Starbucks coffee with all the fancy crap in it. Get you the roadmap indicator. I think it's worth it, but trying to provide value. But you can get the code for free if you want. Like $5 seems like I'm paying $5. Go get the code for free. You can do it yourself. All right. NQ still kind of bearish here. We were seeing that push on down. Look at that. Look at that. Look at that. Found a floor. Hit there, hit there, hit there, hit there, hit there. And we're getting squeezed down. Looks like it wants to get in here to me. Look at the 1 hour. Yeah. Man, look at that downtrend of highs. It's like a wedge right there. So is that a bull flag? You tell me. this a flagpole, bull flag, pin it. When we break out, guess it depends on what happens. Do we hold it and go higher, or do we fold it and take a bigger correction? I don't have a strong feeling either way, although I think we didn't touch the upside as much as we could. And we're just back testing the breakout here. Back testing, back testing, back testing. A little bit of enthusiasm and go higher, take another whole leg higher again. Russell. This is an interesting chart. If we break higher than this high right here, that high comes from basically the flip of the year, right around January. If we break through that high, we're probably going to take this on higher. And the hedge that I have till October, it's probably going to not work out. If we come down, break through the daily roadmap line, we could accelerate down pretty quickly. Things keep really spicy. That's why there's a giant hot pepper sitting there. So that's the things I'm watching right there. I'm watching this level and watching the roadmap line right there, the daily roadmap line right there by the hot pepper. So if we break down below it, things are going spicy town. If we break above this, the hedge is probably cooked and we're going higher. Now, we've made a massive move up off the lows. This is a massive, massive move right there. Looking for analogs, things similar to that. Right here. Maybe like, well, that was a bigger correction. Yeah, it was. But at the same time, we do the same sort of patterns over and over. This thing, we came up, a little bit chop, and then kept going. See the similarities in the way that looks right there? So we may experience a little bit of chop, and then keep going. Now the count's pretty full. Elliott wave-wise, we need a bigger correction. And below 4 or before we're above 7, that's still kind of my thinking, my primary expectation. But where can I be wrong? Be wrong by copying COVID on a smaller scale. Look, I mean, look, when you put it on this scale and have both of them on the same, it's just a little baby copy of that. So we could go higher for longer and take things. I mean, it's been a market axiom, idiom, whatever they call it, for a long, long time. Market saw. The market can remain irrational way longer. You can stay solvent. Just because it needs a big correction doesn't mean they're not going to push the limits even further higher. They being the collective consciousness of humanity, pushing prices higher. The thing about higher prices is it tends to bring, in the stock market, higher prices bring more attention, bring more higher prices until the last sucker buys, and then greater fool theory would go down. But economics works the opposite way. And that's why when people use economics to try to predict the stock market, they get burned. Think about it. Higher prices in economics yield less buyers. Lower prices bring more buyers. Lower prices in the market make everybody scared to death, and the buyers dry up. There you go. So you got the easy button. You click the easy button, add it to your indicators, and then when it's in your favorites, you just click on it, market roadmap right there, and you add it to your chart. Easy peasy lemon squeezy. So you got to add it to your favorites. You got to click the button on the, and then you got to add it to your chart right there under indicators. Big market roadmap. Ciao. And I write a lot of indicators for myself. A lot of those are just different versions of the same thing. So there you go. All right, moving on. How do we make money? How do we make money? Let's take a look at oil. It's under the support. Let's go down. So next level support right in here between that 786 at 59 and the prior low right back there in May. It's hiding behind me, probably. Down there at 55. So we've got support at 59, 76, then we got support at 55. And if we could push through that, we're going down to the low 50s, which is my target zone that I've had on here for a couple of years. I would love to finish this up by now. Come on. Let's get it going. Gold. Not strong here. This is not the strength I've been looking for. If we push down below this kind of loose uptrend of lows, probably going to go tap the daily roadmap line. I would love to see a low lower than this low we made back in May, kind of like oil. If we could do that, cleans up the chart and sets us up for going higher. Bitcoin had a big rally yesterday. Now we're taking it right back today. Lame. That's freaking lame. Freaking lame. All right. So we made a lower low right there today at midnight. So despite that rally, we made a lower low, whether you like it or not. And this is on TradingView's index. So whatever broker you pull up may or may not agree. If you didn't know, Coinbase's data is different than Binance's data, different than, you type in BTC, USD. Look at all these different data sources you can get. All of these are different. No two charts of these are the same. Maybe like, why not? It's because there's no centralized price control for Bitcoin. Every exchange has its own price record. I go with TradingView's index and just kind of stick there. You got to pick your favorite one. Which one's the best? There's no best. You got to pick your favorite one and stick with it. Sometimes I'll look at different exchanges. Coinbase, I usually go with the, TradingView. I like that. And then, I'll look at Coinbase's or Binance's because they have higher volume. Low volume places tend to skew data. So looking at this right here, we have the move up from the early August low. Retrace right now. As long as we hold this level right here, we're good. If we start getting candle closes underneath it on the lower time frames, starts indicating we're going on down. I thought we were going to do the reversal yesterday, but we made a lower high and then came right back down and made a lower low. Reversal voided. So more chop is what we've got. More chop is what we got at this point. Couldn't break through. Downside potential down here. 110, 109. And looking at the bigger picture, we might go down to back test the breakout. So we did this downtrend of highs loosely, then we broke through, took off. We might come back and test that. And guess what else is hanging out there? The daily roadmap line. Right there. Could come all the way back into this 106 area. Now, if we get under the daily roadmap line, it's going to be no bueno. Not good for going higher. So be careful out there. Be careful. Ethereum, still working on this correction here. Still working on that correction. Didn't, obviously we haven't found a bottom yet. So still working on the, how far do we go down? Now, it'd be great to find support right in this vicinity at 4,100 and turn higher. That would be positive for going on higher. Could be a 5-wave up, a loose 3-wave retrace, kind of a little bit ambiguous like corrections typically are. Let's see, we pull this on down, pull this on over, and we may bottoming in this vicinity right here, right around 4,100, turning back higher. That'd be good. When we get back above this level right here, 45, 75, 4,600, that'd be an indication we're going to retest this high up here, try to break higher. But right now, you need to be on full caution, red alert here. If we don't go back up, if we don't find support and turn back higher, that could have been the high for Ethereum. How do you know when things are getting risky? We start breaking down through 3,900, then we break down through 3,400, then we break through the roadmap line wherever it's hitting at that time, somewhere around 3,100. And if we break through all that, we're probably going down below 1,000. Still a very real possibility. That thing rallied up strong, lower high, can still go all the way back down to the bottom and make a lower low than we had right back here in 2022. Crazy. It's crazy, but the price action supports it. We had one move up, retrace, and the third move up. Trend, pull back even though it was deep, continuation, lower low. A lot of naysayers, a lot of people are like, no way, yes way, Jose. All right, looking at NKD, global liquidity, consolidating high, has a breakout. I would love for this thing to get an extension. That's probably going to take, if we get an extension on it, that's probably going to take most everything higher. Most everything risk on. Bitcoin is the ultimate risk on, risk off asset. So if we see risk on, global liquidity increasing, Bitcoin up, ES up, NQ up. Those are all our risk on assets. Russell, we'll see what happens. Dollar continuing its correction here, or the correction of the big move, I guess. It's a story like you got to talk about time frame. We're not correcting the move up. We're correcting this move up right here from 2009 to 2022. We're correcting that. When you dive into the smaller little picture here on the daily chart, we made a 3-wave move up, A, B, C, turned down at the perfect proportions, and then we're doing a 3-wave correction here. Perfect proportions would be down here to find a bottom. And if we get continuation even lower, like if this is the trend, this was the pullback, and this is the continuation, probably going to see re-hitting that downtrend of lows right there. It was hot downtrend of highs, then it was downtrend of lows, and we may hit that again. Ideally, this correction would look really good. First move down, the retrace, next move down, to bottom out down here in the low 90s for the dollar, but doesn't have to do anything. Doesn't have to do anything. So Mag 7 stuff, Apple, still not doing anything. Still staying between the uprights. Still hanging out. Could go up here and still do the big correction. Apple looks like it's in a funk, similar to the way Microsoft was for a good long while. Microsoft did this ABC correction back here. A, B, C. After it got done being funky, it made a 60-something% gain right up to almost to the target. Now we're correcting back down a little bit. We probably find support and go up there and actually tag that 565. But Apple right now working on that funky correction, and we might take it down again. Maybe like, well, if that happens, then the market's going down. Market may correct a little bit. It's kind of in the cards. So Amazon still chopping around right here. Google still chopping around right here. And yeah, Google, if we can break higher, we can fill that gap. 207, probably going on up to 219, possibly 230. Said this over and over and over for weeks now. Nothing's really changed. Meta hit the top. Now, retesting the breakout. If we can hold the breakout, probably going on up here. If we get back below the breakout, probably going all the way back down again. This could be just a big ABC correction, and we kind of come back right near the lows again. Microsoft, like I said, probably going to retest some of these fib lines. If we can hold it, go higher, probably going back up to retest that 565 area. Here's the levels of support, 508, 489, and the breakout down at 468. You'd be like, that's a massive pullback. That's what you got. Failed to hit the upside target. Now we got to find support before we can go higher again. NVIDIA, probably going to push out to 212, but that doesn't mean it won't retrace back down to a support level before that happens. So be careful. Careful just going all in. It's kind of a testing, trying time. Look at what we did. This is promising. Here's the level. We got to break above that 350 area. Come on. Give me an alert. No alert. Cool. What the fudge? Come on. It didn't set my alert. Yeah, look at that thing. There we go. Edit this. I'm very interested in this. I'm long Tesla with a lot of TSLL, few thousand shares. I like that we held that back test, but we got to get continuation. If you get the continuation, game on. On like Donkey Kong. Netflix, potential upside resistance, 1264. Downside target, right down in here. Absolutely beautiful correction. How long could it take? Yeah, we could be out here in September, October, and take a while. I know Rungemer wishes it would take fast, but... And we could go fast. I mean, like, you look at the last one back here. Came up shy of the roadmap line, came back up to the 618, and then it was only about 2 weeks and we were down there. So if that was the top, could be 2 weeks. I don't know if you got 2 weeks still, Rungemer, but, you know. There you go. All right. So I've got a list of gainers. I got a list of decliners. That was things moving up or down $2 or more in the pre-market. Sometimes we can find good stuff in here. Sometimes not. That one's just popping up the targets. Look at the pullback back here. We're at the target. We already hit the target, so we're at the target again. Not really anything. NXST, I wouldn't mess with that. A lot of chop sideways. Just not my bag, baby. PNW. Still grinding in here. This is set up for going lower potentially. Be careful. Got resistance at the gap fill. We did bounce at the 618. So this is interesting. We came up potentially 1, 2, 3, 4, 5 up in the vicinity of the prior high. Retraced to a 618, held, coming back up, struggling at the roadmap line. If we can get through it, fill the gap, sets it up for outperformance to the upside. What kind of outperformance to the upside? Let's take a look at that, shall we? That would be a potential 1, 2, 3, 309. This is another picks and shovels play for the AI revolution. Palo Alto Networks right here. Look at this potentially being a my eyelid was itchy. Maybe because of Kimberly. She's getting something looked at on her eyelid today. Anyway. 1, 2, 3, 4, 5 potential. That's pretty big. If this can break out. So all starts with a gap fill. Oh, that was cool. Magnet turn on. Gap fill right there. We can gap fill that baby. Taking off. Lily. Potentially made a bottom. That's that can be done. Could be. So watch for the gap fill here. Also, we gap fill it, break through the daily roadmap line. Then we got to beat the downtrend of highs. Then, I mean, that's a lot of resistance, but if it's done, it'll break that one. May retrace a little bit, but it'll break that one. May retrace a little bit, but then it'll break that one. And go on a new run. So that could be done. NVO kind of very similarly bottomed out. So we're seeing healthcare kind of potentially have bottomed. You know, UNH also potentially bottomed out here too. So we're seeing a lot of the same pattern show up. You know, UNH has a big resistance right there where we gap down. And then the roadmap line sitting right on top of it. HD coming back up. This is one of my bullish stocks right here. Right here. We did a potential 1, 2, potential 3, ongoing. Maybe like, well, how high do we expect it to go? Right there. 457. 1, 2, 3, 4. And then 5 would be on higher. There. Maybe like, well, why aren't you trading it, JT? Because it's too freaking expensive for my smaller accounts, everybody. Speaking of, you know, trading it. Bum, 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 bum. Let's look at the year-to-date performance. $24,000 now. Doing pretty good. 95% win rates. Average gain, $262. You know, gap was, I closed, funny enough, that was closed on the 13th, not on the 4th. Yeah. So here's my real trades, real deal. There's the profit and loss. Where's the big pullbacks? Don't really have any. That's the thing about it. There's 3 months. This is the 50K challenge is what I call this. My goal is to build this into an account that generates $50,000 per month. And right now we're way shy of that. That's 3 months and that's 20K. So I got a ways to go. Looking at the 1 month, 14K. In case you can't do the math, 14K less than 50K. So I got a ways to go. Probably gonna take a few years. Right there. And I don't just want to do it 1 month. I want to do it like 6 months in a row. So the 3-month, that'll be like 150K. And a 1 year, in case you can't do the math, that'd be like 600K when I can do it for a whole year. Maybe like, it doesn't seem possible. Okay, well, I'm going to sit here and do it publicly. All the trades are posted publicly. You may have to join KInfo to view it, but all the trades are here, every single trade. All publicly accessible right here, every one of them. And funny enough, I didn't trade that many gap put options. So something weird's going on right there. Glitch in the matrix, I guess. I have to report that bug. That's just it's hung up. But all the trades are there, so if you want to see them, you're like, what's that red one? That red one was VIX. Bought VIX back there as a hedge. Didn't work out. Oh well. Sometimes they don't. Insurance. You don't buy a car insurance expecting it to pay out. So that was portfolio insurance. You can see, did I take some losses? Sure, I took some losses. Do I make money? Yeah. Do I show it publicly? Yeah. Does anybody else do that? Debatable. Not many. Not many gurus will show you all their trades. Caterpillar. Grind into here. Looks like came up shy of the target. Retraced. Back tested the breakout. Potential to go on up higher. 445, 471 right there. They only post after I close them. KInfo is very adamant about not shadow trading. It's just kind of their personal or their belief that you shouldn't shadow trade somebody. You don't know the ins and outs of the trade, so you can't just follow along on KInfo. They audit closed trades, but not live trades. So this one's interesting. Plymouth Real Estate Investment Trust here. Got the low, we got the high. That might be bottom. Bounced off the 618 right there. Getting above the roadmap line today. If we get above this level right here, could set this up for an outperformance to the upside, which is kind of crazy for a real estate investment trust. We can see this thing rocking and rolling up to 120. That's kind of crazy. Real estate investment trusts don't move like that. Not usually. I speak from experience because I've been trading real estate investment trusts since basically when I started trading with real money. Wow. That'd be a massive, crazy move right there. Let's see what the yield is on this baby. 6.5. A little light for the double dip trade account, but I might put that on. I like that potential. I mean, wow. So there's a potential right there. Moving on. It'd be a long-term hold play for the dividend. Double dip is you play for the upside move in the price and the dividend. And a little light on the dividend, but I like the potential on that one. AVAV, looks like we want to retrace. Be careful. It's nothing to do with the gap. Everything to do with the fact we did a move down, a retrace, held, and we might get the second move down to the roadmap line. CRWD, there you go, down to the roadmap line. If we can hold it, potentially going higher. If we break through, potentially coming on down lower. Lows, bullish like Home Depot. Didn't have the beautiful proportions, but it did a nice move regardless. First move up, the retrace. Next move up could put us at this target right up here. Well, we're already close to it right here. And we may experience a retrace and a push on higher, back to the all-time high. 2x on Rocket Lab. How's our buddy Rocket Lab doing? And after hitting the target, we're just kind of still correcting. I've got my alert down here. I want this to come back to the roadmap line before I mess with it again. In case anybody missed it, I started trading it here when we broke through the 618. Selling puts, selling puts, selling puts, selling puts. 4 weeks I sold that. Got put shares on a Friday. And we rode those shares up to 40. I sold upside calls at 41. Even though we popped up here, I got called out at 41. Made 12, almost $13,000 on that. And now I'm looking for the retrace before I do anything with that again. Got to know when to chase them and when to quit. And when to chase them and when to quit. Hadn't really done much after we got out. DEO. Some people say I just got lucky on that one. It's okay. Diego finally pushing through the roadmap line. Can we stick it? Can we get a higher high? If we can, there's the next resistance right there. About 134, 135 up there. Zscaler. Yeah, we kind of hit the target. We might do a bigger retrace here. Daily roadmap line coming up right below us. Wouldn't surprise me to hit that at 250. Let's see, leverage. Laser photonics. Doesn't look like a chart I want to get involved in. Best Buy. Under the roadmap line. Be careful. We're poking up into it, but not that. I mean, that's the downtrend of highs right there. Easily result in a lower low. ENTG. That's a 3 up. Big retrace. Watch out. That can go lower. And then circle was green. Now we're red again. And in case anybody hadn't missed it, I think this is a bubble pattern. And we're going back to the lows. Looking at decliners, FN, probably coming back down to the roadmap line after getting that big up. Big up was pretty crazy there. JBL, looks like we're going to come back down to the roadmap line potentially. FSLR, there's the upside target just above us. Zip. Man, that's just... So that has a reverse split. It's on the danger list. I wouldn't touch it. Wouldn't touch it. You can do what you want to with your own account. PLTR, look at that. Hit the targets. And coming back down. Has nothing to do with the company. It's all about the chart. Probably going to come back down to a support. Could just retest the breakout, which, look at that. It's all coming together. Same vicinity. Right there. Somewhere around 130. Not going to surprise me one bit to come back to down to 130. All right. MDT, chopping around. Roblox, probably going to come back down. AMD, be careful here. We need a correction. This is one big move up. Glanced off of the prior high. Instead of breaking out, it needs to come back to at least 130, if not all the way down to 100. Yeah, that's a big move. And something I heard this week, this last couple of days, the CEO of AMD and the CEO of NVIDIA are first cousins. Think about that. That's kind of crazy. First cousins. TNXP. That's a resistance. Watch for downside. Yeah, thanks, Sledge. You know, term out treating them. Get it all, baby. Viking. Retrace PTCT. Chopping. Newegg. Danger. Dumpster fire. Reverse splits. Galore. XXRP. Looks like that party might be cooked. Ouch. 3X on Korea. That party might be cooked. Needs a retrace. Back down to support. That's 3x leverage. MP, be careful here too. David, I know you love this thing, but that one might be cooked for now. We might need a retrace back down somewhere in the 40 to 50 zone right in here. Could take a couple weeks. Funny enough, you look at a big picture and it just did the pattern there. Held a higher low, popped up, hit the extension. We might, so there could be support at 60. The breakouts could be a wide support between the two highs there. I would expect a retest of that area before we push on up. Pushing on up, get us to 96 potentially there. All right, things that were set up for an entry today with the market roadmap bounce. First off, we have AGM. Here's the high, here's the low. There's the entry, 207 targets. BTSG. Here's the high, here's the low. There's the entry. Here's the target, 2650. IMKTA. Here's the high, here's the low. There's the entry, 6983 target. Pin. Here's the high, here's the low, here's the entry, 1992 target. Same pattern over and over. And see this one back here didn't hit. This one here didn't hit yet. Didn't stop out either. So 6 target and a 695 target. SNX. SNEX. Say all the letters in the right order. 103.92. Potential upside. And last but not last, last but not least, URNJ, Junior Uranium Miners. There's the high, here's the low. And I'm not a fan of this pattern, but 24 target and might come back to the roadmap line. Be careful. That consolidation right there, not my favorite. That looks more like we're going to do first move down, retrace, second move down, right there. All right, that's the list for the day. Bias, expecting some upside. If we can turn it, we're already turning it green a little bit here. So if we could do that, upside target, 65, 62 for the next upside resistance. Yeah, like, well, you've been talking about that for weeks now. Yeah, because it's still the same target that we've had since we busted through down here. This was the first one. Consolidate a little bit there. Now that's the next one. We might consolidate a little bit there. And then the next one up above 7,000. Prove me wrong on the below 4 before we go above 7. Next one up, 71.30. See what happens. Be careful out there. The account you save may be your own. Nobody's watching out for your money more than you. Take a vested interest. Have a plan. See, it's not, I mean, if you have a plan, it's not being wrong that costs you big money. It's staying wrong, doubling down, stuff like that. That's what costs you big money. So be careful out there. See you again later. Bye for now.